Hello there. Welcome back to Elements in Focus. I'm Grant Soliven. With me always, Director of Financial Planning, Aaron Rheaume. We are so glad to have you back in this new year. And again, so much to talk about with Elements in Focus. If you didn't get a chance, actually a pause, if you are new to Elements in Focus, I highly recommend you look at the video that was just put out by our team on what Elements in Focus is. It does a great job of explaining what we're trying to accomplish here. And so recommend you highly look at that. Today, we're going to focus on tax planning as a critical element. And, with the new year, there's obviously tax code changes, right, Aaron?
Mm-hmm.
So we're just going to spend a little quick minute here with Aaron talking through some of the updates to the tax code and some things to be cognizant about going into that tax preparing season.
Yeah, Grant, thanks for the introduction and getting us kicked off. So we're not going to spend a lot of time because there might be some changes. There's always some tweaks throughout the year. But things that we do know that have changed for this year is in your marginal brackets, so the 0, 10, 12, 22, all the way up to 37%, your marginal brackets got an increase in the amount that you can make to keep you inside of that bracket. Last year, and we referenced the 12% tax bracket quite a bit. Last year, the top of the 12% tax bracket was roughly $89,000 and some change. I believe that went up to right about $94,000, and that is taxable income. So you take off either your standard deduction or itemizations off your adjusted gross income, come up with that gives you your taxable income. That's what will put you into those marginal brackets. Some other changes that took place this year for IRA or Roth IRA contributions, there was a $500 bump in each, so you can now contribute, if you're under age 50, $7,000 to a Roth IRA or an IRA, and if you're over age 50, there's still a catch-up of $1,000, so you can make an $8,000 contribution. 401k limits went up just a little bit. Last year, there was here in Indiana, I just want to make this as a reminder, there was an increase in your 529 plan contributions for the Indiana state tax credit. It used to be a contribution of up to $5,000 would give you a 20% tax credit. So that's $1,000 that you could get against your Indiana state tax. That did increase to $7,500. And so now you can get up to a $1,500 Indiana state tax credit. Anything else that you can think of? Those are the basic changes that have taken place. When you're in our offices for the meetings, we will know more as more information comes out. We'll have our handy little tax guides that are coming out here pretty soon. Waiting on those just because if there are any last minute changes, we want to make sure those things are set in concrete. But we do have good things that have taken place for 2024. We will make sure that we're implementing those changes, talking to you about those in your family updates.
Absolutely. And so this doesn't become just a big long list of changes, Aaron. Your unique situations are very particular to you. And so so we don't just start rattling off numbers and changes. We want to make this specific to your situation. And so if you haven't already talked to a team member, the Financial Enhancement Group, we would love to, as Aaron stated, walk you through your situation specifically. So go ahead and schedule that complimentary next steps meeting. If you're not already meeting with our team today, you can scan the QR code. You can make a call to the 800-928-4001 number. Someone from our team will be more than happy to schedule a discussion with you. And if you just have basic questions about some of the updates, please don't hesitate to shoot us a message at talktofeg@yourlifeafterwork.com. Someone will always be there to answer your questions if necessary. And so thank you for your time. We always appreciate the viewership. And again, if you have any questions, let us know. With that being said, have a great day. We'll see you at the next one.